Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the US 30 on a daily chart, and we're basically just following this little pattern that we've had here for a little while, and what we're looking for here is an A wave, a three-wave swing, basically an A and a B and a C wave. Once that's finished, we'll see a push high there. Most markets are correlated at the moment, so they'll all be pretty much sort of working together. So if we can have a smaller view of this here. So this is the S&P 500 here, just a 2-hour chart here. The strong move down here from the Fed's meeting, we can consider that wave A here, and we'd be looking for wave B. Wave B normally pulls back 61.8% of the wave A here. This wave A is just basically finished now. It will grip onto the 1500, and we'll see a three-wave price action up here. It can pull back up to 61.8%, which is sort of up here further, or being a large number, they can tend to gravitate towards that, and stick to those sort of whole numbers as such. So but that B wave doesn't really sort of concern us that much, and even day traders need to be very careful about trading that. The C wave would be easier to trade. But once we've got this A, B, and C here, then we'll be looking further to the upside. Now, the trading levels here are normally quite sort of handy, because for the people that understand them, that the top of Group 1 here, the 10, 20, and the 30 here, if support is found on top of any Group 1, a tested support, then the market separates itself from the closest largest number here and would move up from that point. So that's always been a saving grace for us. The other point now is that because Group 1 has trapped the market to the closest largest number, then we normally find Group 2 down here, 65, 72, and 80 will be the support there. And normally when markets are working with numbers here, the larger number becomes the balance point within the unfolding correction, and the distance above can have some sort of equality with the distance below here as well. So that's always good to know. More so when it doesn't stop here as such, and it will just go straight up, then it will have that swing down as such. So, but look, this is taken a day or two to get down, be a day or two to get back up here, and the C wave, if it's lazy, could be up to 3 days. So we would be looking for today's Friday, so we'll see Friday. If we get a strong closing on Friday, then we'll see Monday up as well. So it'd be for the local markets as well. If we have a look at, and this is the same for the European markets as well. So when we're looking at the FTSE here, the 63 will be the balance line here. We'll be looking at an A wave down, just maybe down a tad further in the next session, the B wave and the C wave, and then back on here for support. So that's the trade. Be careful not to lose money in this area here. The C wave will be easier to trade than the B wave, but the longer term trade will be waiting for the A, the B, and the C, and then waiting for support there, and then trading long off that point there. So the Australian market's the same as well. So when we consider, don't worry about these wave counts here, but basically we've got an A wave down through here. The distance above here was the 5100, so the 4900 naturally comes into play here as well as the equal swing point across the 5000 through here. So we'd be looking at an A wave, a B wave, and a C wave through here. So the distance of the C wave coming down will depend on how far the B wave goes up, because if the B wave rally goes up really high, well then it's really sort of buoyant, isn't it? It's strong. So then the C wave will be lower through here, and we'll see that as a flat correction. But if the B wave was, lower, then we would expect the C wave to come down further as well. So the move down through here is in 5 waves, so that means we will get another 5 waves over here after we get a 3-wave counter trend here. So I suggest be very careful about trading this one through here, but have a go. Such okay, the commodity. Just going to start with oil here. Oil follows stock, so it'll just be working with the S&P 500. So you understand that wave count with the S&P 500 in that ABC correction. So you really need to sort of convert that back into this market as well. The move that we're looking at from these 98 highs up here, 8 profit taking number, is we're still looking at this as being a corrective move down through here, and even from this high here, one of the reasons that we can see that this move here is in 3 waves here, so that's a corrective wave, and this is obviously a corrective wave in a bear market. This is a corrective wave in a bullish market. But because we've got this here, we know that this move down through here is corrective. This should find support down here shortly and follow the S&P 500. There would be in here, there will be 5 waves in here in terms of the 1, the 2, the 3, the 4, and there'll be 5 waves unfolding in through here. So we should see a retest off the 92.50 or 92 in here somewhere. See some sort of retest back to here following the B wave rally in stocks, and then another move down through here. So we'll be seeing this market continue in 3 wave structures, but we know that that's corrective. So we just really need for the S&P 500 to finish off, and then we'll see a move back up, making new highs above the 9800 here. The copper market here is still falling out of bed as such, and the midpoint here, 350, would be the next port of call here. You can see that any story's got a beginning, a middle, and an end, and as trends and corrections do so, we've got the beginning here and the middle here, which is the most powerful point in the structure. People realise what's going on, and they're all jumping on ship, the highest point in volume and so forth. But in the bigger picture on the daily, this is a CFD over the futures contract. So, but the spot market here, this is a daily chart on the London market, but it's just basically what we're looking at here on that little intraday chart was this little bit here. But as I wanted to point out, and we've pointed out before, is that we've got this triangle pattern through here, an Elliott triangle, which is in 5 wave, which is a 5 wave structure in terms of an A wave, a B wave, a C wave, a D wave, and an E wave. There's 5 waves in a triangle, a bit like sound petering out, and each structure within that would be a 3 wave counter trend as well, and that makes it a corrective pattern as such. So we know that this is a corrective pattern. So, like, essentially, this low should be taken out here. That's what we're looking at through here. But before turning bearish and such, we like to have the closest largest number, which is the trading level 8 here, as the retested resistance at that point there. So the US markets have got this same pattern here as well. So the low down here would be the 300 down through here. Yeah, so anyway, it's just something developing, and we'll watch it move through that way. The precious base metals and precious metals have obviously got the same sort of to a certain degree as well. They've got some sort of correlation, but the precious metals took off first, and the base metals are sort of following. So this is just a 15-minute chart on the gold chart here. Might be a bit easy to see it in. I'll just go to a bigger chart in silver here. So with silver here, we've got this nice strong move down through here. So this move that we're seeing through here on the hourly chart here is corrective in terms of an A and a B and a C wave. So we should see that make more new lows down through here. So yeah, that's that. And the gold market's pretty much the same. So on the 15-minute chart here, silver's been leading the way. So it's always good to have a look at that. It was the first one to break down. So it just seems to be in front. You know, there's leaders and followers. The leaders tend to have more range, and the followers are sort of safer because they are following, but they don't normally have the range. And that's the same within stocks, within sectors as well. But anyway, this here should be a 4th wave rally here. We just got to be a little bit a bit careful of this, because in another way, it's actually 1600 here is the closest largest number, and this will be covering short positions, people exiting short positions, and it can bounce quite sharply. That's the normal case. But it is like to be seen as a retesting the 1600 here. But if silver's going to break lower, then we'll see this break lower as well here. But if you're going to re-short this here, you want the 1572 as a retested resistance. So what is a retested resistance? It's good to bring the volume into it if you can, but just essentially you can see this market's moved through down here. We would never chase that, never chase something when it breaks through. It's always the retest. So looking for the retest to fail. If that failed there, you could have been short here. You may have been stopped out through here, but then you would have been sort of back in through here as well. But this is where the volume comes in to help confirm the price action as well. So you really need to be reading the volume in whatever time frame that you're in as well. There's videos on the site for that. If you can't find it, then let me know. Right, let's have a look at FX. Okay, just looking at the euro here, the markets are correlated, so the euro is going to be following the S&P 500. So looking at the S&P 500's wave count, as you know, that ABC correction we're looking at, so we can pretty much relate this move down through here as the A wave in terms of the S&P 500. Okay, so we know that the S&P 500 at the 1500 mark is probably the low of the wave A. So we'll see a B wave rally. So that's what we're sort of looking for here as well, as such. So just sort of bear that in mind if we look at that on a and once this correction here is finished, and we also need the top in the US dollar index. Now, if the US dollar index takes out its previous, we're sort of looking for it to sort of have its high at 81.45, 81.46 area, but a breaching of that would take it to 82.50. So just sort of just keeping an eye on that at the moment. But I think that if we use the S&P 500 and the euro together, then we'll be able to track the wave count a bit better in that case. So we are expecting a rally off these lows here. This wave structure down through here should be in 5 waves. The third wave's in the middle here, so you can see that this is the ending of the structure here. So euro, if we just go back, this is the move that we're talking about just coming down through then. So I was looking at this being an ABC here for the 4th and down for the 5th. So it's made a new low through here. So if the S&P 500 pushes up, well, then we can expect this to push up from here as well, or it may even make another low. No, that should just about do it actually. But don't go long until like a breakthrough is not enough, unless you're trading sort of robo style. But breaking out's not enough. It's the retest, the Dow theory, so to speak. So look for that on any of these sort of levels here. Right, the Australian dollar as well is going to be following the S&P 500. I thought it might push down to the 102 first, but just be mindful of this. This is obviously this is a correction through here, and the longer term trend is to the downside on this particular market here. So. But look, a move back above the 102.50 here would see a higher rally. So just be a little bit patient, allow this to play out through here, because this will have the same sort of relationship as the copper market as well, moving to the downside. So just bear that in mind. But we've got a larger picture here for this. Hang on a sec. Okay. If you've got shorts in the market, then it's probably a good idea to cover this at this stage here. And if this price point here, this previous low here becomes the retested resistance, then either add to the positions there, or we'll be expecting this to rally in line with the S&P 500 in terms of that B wave moving up. Now that B wave moving up, the strong number here will be the 102.72 area here, as we've sort of pointed out before. That it will pivot off this particular point here. So, but this is basically down for wave 1 here, as you know. coming down to here, and this is the A and the B and C for wave 2 here. So this is the third wave coming down. So in the third wave coming down, this would be just down for wave 1 here. So we'd be looking for this is probably part of that. So we'd be looking for some type of correction back up in here, and there's plenty of resistance here at the 65, be the 72 here, and this little area through here. That's obviously the resistance is these highs and these lows here. So that's what you need to look out for here. So yeah, let's just have a closer look at. Okay, look, if the price gets trapped under the 102.30 here, then look for a further downside movement here, and it would be a choppy environment coming through these levels here, and there will be a bounce off here as well. In terms of it moving to the upside, it's retesting the midpoint here, the 50 here. So if we just look at this as a 15-minute chart, so if we have a look at the 5-minute chart through here. If you see that we get 5 waves up off this low here, so we've got wave 1 here and wave 2 coming back here, and we've got this wave 3 here. Now this can also be an A and a B and a C wave to the resistance point here, the 50 here. So if it just goes to the 50 here and then moves all the way back down, overlapping the top of wave 1 here, this here, then you know that this move up here is corrective, and then you can look to short down into this area through here. However, if it counts as an impulse wave to the upside in 5 waves, the 1, the 2, the 3 to here, the 4 back to here, and then the 5 up through here, what will happen then will be an A and a B and a C across here, and then it will move up further from that point. So you need to be long on that support there. So that would move out in this way here. It would be the 1, the 2, the 3, probably into the 50 here, or maybe even the 48, because 8's a profit-taking number. Wave 4 would pull back 38.2% of the length of wave 3 here, and then wave 5 would create the first high above the level. Then the A, the B, and the C would occur, and then the next move to the upside would be moving up through there. So you would look for this point here. So you need to work out if it's going to be 5 waves first, or it's just going to be 3 waves up. But in both cases, you'll get this wave 4 coming back down. Well, not wave 4 in a corrective move, that will be wave 1 if it's going to be there, but you won't know that until you get past that. So you could probably even get a short in from the 102.40 as a retested resistance, so long as it, retests it at that point and fails it from there. So it should follow the S&P 500 and the euro at the moment. All the markets seem to be quite correlated. So have a bit of a look around and see what you can work out from that point. But once this rally is completed, then there'll be further downside on the Australian dollar. Alrighty, well, that's it. So in terms of our robo trading, because we're going to be facing we put shorts on yesterday, and they did well. So we might put the stops really sort of tight on those, take some profit on the opening, lock in some profit on the opening, keep tighter stops on them. So we just pretty much take the money off the table while this B wave is rallying, and the longs that we've got left in there, they can get a bit more sort of height and space into them as well. So we'll do our best to navigate through this ABC correction, but it's not always easy, and you always need to take a balanced point of view, the middle of the road point of view. And that way you don't sort of stress out as much. But once that ABC is finished, then we should have that run to the upside, and that's what we'll be looking for. Alrighty, well, good morning, good luck, and enjoy the week ahead. The weekend, rather. Cheers.